Hello, everyone. Thank you for joining us for the New Capital webinar, Special Markets Update 2020, number 4. This is Catherine Barr, the Director of Communications at New Capital. For the webinar tonight, Leonard's going to be answering questions at the end of the presentation, so please feel free to submit any questions you have in the Q&A tool, and the webinar menu should be at the bottom of your screen. So before we get started tonight, I'm going to make the following regulatory disclosures. This New Capital presentation is being made available for educational purposes only and should not be used for any other purpose. The information presented does not constitute and should not be construed as an offering of advisory services or an offer to sell or solicitation to buy any securities, related financial instruments, financial services, or other services in any jurisdiction. Past investment performance is not an indication of future results. Wherever there is the potential for profit, there is also the possibility of loss. Certain information contained herein concerning economic trends and performance is based on or derived from information provided by independent third-party sources. New Capital believes that the sources from which such information have been obtained are reliable. However, we cannot guarantee the accuracy of such information and have not independently audited these sources. Okay, thank you. And now I'm going to turn it over to Leonard to get us started.
Hello, everybody. Good evening, and thanks for being with us. Hope you are doing well. My first slide is this one, TGIF. The weeks seem so long, and so it's really great when Friday rolls around. It's a beautiful evening here. The snow just started, and there's snow coming down all around. It's just gorgeous. And so after this webinar, I'm going to have a glass of wine in a hot tub. I want to say, of course, the ordeal, as it were, that many of us are going through in being confined, compared, of course, to what our medical professionals go through. And I've been reading articles, as many articles as I can find from all over the world. There's an amazing piece from the New York Times this morning on Italy. It's one of their really phenomenal multimedia presentations where they have photos and other, and of course the article itself. And it is really amazing the work that the medical professionals are doing to try to deal with the crushing load of people in Italy, and now as we're seeing developing here in the United States. And so our thoughts are with them. This quote caught my eye. John Barry, a historian who wrote a book, The Great Influenza, and I've been trying to learn as much as I can about the 1918 influenza. The historian Ken Burns also has did one for the American Experience, and I watched about 15 minutes of it the other night and fell asleep. So I'm going to try to finish that tonight. But Barry's book, written in 2004, apparently is the authority. And he says, those in authority, one of the learnings of this episode, those in authority must retain the public's trust. The way to do that is to distort nothing, put the best face on nothing, to try to no one. And clearly that is taking place at the local and state level here in the United States. Kids to the airport the other day, they returned to Houston, and as you can see, photos from Denver International Airport, the iconic TP roof that is there. And I mean, this is noon on was a Sunday, noon on a Sunday. Look at that, completely empty. That's the Southwest terminal drop-off area and inside. And so truly the country is shut down in so many ways. I'm still here in Breckenridge, and am constantly reminded here how important Mother Nature is, and what an incredible fallback we have. Just taking a walk down your city block, going to a park, whatever it is, it seems that people are rediscovering the importance of nature. I managed to capture this shot at sunrise the other morning, and just astounding. And I mean, as wonderful as that photo is, of course, it's nothing like seeing the real thing. So I hope everybody's doing well and taking care of yourselves. And as we know, to stay under quarantine and to listen to the instructions of our county officials, city officials, state officials, as it were, that this is an act of assistance, an act of help to try to help stop the spread of this virus. People who are asking me, where is the market headed? Well, there it is. There's my drawing of where the markets are headed. How about that? So we're right about here, and then I think we're going to do this, and then that, and maybe a little more of this, and then it's going to, no, this was sent to me by a client this morning. I thought it was really funny. And so I said I would put it in the presentation. Anyway, I don't know where the market's going, but I do want to say that, of course, unless you haven't been paying attention, the market has up until today had a 3-day rally, and that wasn't just a rally. 4 days ago, the market rose the most in one day. It was a 10% rise in the market, the most that it had risen, I think, since 1930 or so. Largest one-day rise in almost 100 years took place 3 days ago. And then there was a subsequent 5% rise or so. And then yesterday, a 5% rise. In other words, we had essentially technically a bull market, a 3-day bull market in the Dow. Didn't happen in the S&P 500. It happened in the Dow. I don't know. I didn't stop to look. I suspect Boeing had some sort of big rebound. Boeing's part of the Dow. But this is a sign of the volatility that we've been experiencing, where we had a bear market that developed in the course of a month, and then a bull market that developed in the course of 3 days. And so no one can predict. And I keep trying to emphasize that to clients. So clients call and say, it's only going to be bad. It's only going to be down. And the story I told in last week's webinar, maybe is the answer. Who would have imagined at the end of this week, right, on last week's webinar, who would have imagined if I would have told you that the markets would have been in a bull market next week? If I would have told you last Friday, nope, next week we're going to have a bull market, a bona fide 20% up bull market. What would you have said to me last Friday? You would have said, that's a crazy man. We need another advisor. And yet we had a bull market of a week. Unfortunately, we did not have a bull market of a week in unemployment. And look at this. Everybody remembers how devastating unemployment was back in 2008 and 2009. Well, here it is. Wow, look at that huge mountain. Well, here are the jobless claims that took place last week. Nothing even comes close to that in American history. And so this has been the focus of the legislation that's been pending before Congress and has passed. President Trump signed it recently, just like a second ago. And we will see. I think the consensus is, of course, that was a down payment. It's going to take much more in order to deal with this large unemployment question. The German government, by the way, has taken a different approach. The German government is making direct payments to companies rather than to employees. And if the company will keep their employees employed, then essentially the government will pay for that. I kind of like that better, right? People keep their jobs rather than getting a direct unemployment benefit. And the current law, or the law that just passed, I think is expected to keep people afloat for 3 to 4 months, something like that. So there's going to need to be more. Just to remind everybody of the process that we are going through, and this continues, triage. Things have calmed down this week from the prior week, but still quite a lot of working to make sure that clients are in good shape, making sure that we understand liquidity needs for clients. knowing our clients, and every day I go through the entire list of clients and think about you, whether I do anything in your account or not. I at least think about you, and are your accounts in the right place? Do I know what's going on with you? So very important part. We have a morning meeting every single morning. Catherine, any tasks that need to be done for any clients or any other issues that are going on. Again, daily survey of all clients in our client roster. Thinking outside the model, meaning I'll take direct trades if there are advantageous trades that I can make in a particular account outside of a model, whether it's on a tax loss basis or otherwise. I'll do that. Loss harvesting, there's been a lot of loss harvesting, trading clients out of portfolios and upgrading portfolios, moving people into funds that, for example, sustainable funds or more consolidated funds. This is the chance to do it. Selling individual positions in stocks without much tax effect or no tax effect. These are all the things that I'm undertaking in the trading process. Planning reviews. We did a planning review with a client this morning, and if you want to look at one number, don't look at the stock market. Look at the probability of success in your financial plan. That's the only number that really counts. And so, if you want to do a planning review, please let us know. We can do it remotely through the video. And of course, looking at empirical past results to see whether we're looking at anything abnormal in market returns or in market movements or interest rates or whatever the case is, and trying to remain grounded in that way so that the drama around the virus itself doesn't overcome my process as a financial advisor. Okay, and then of course communicating, which we're doing right now. I'm going to turn this back over to Catherine right now. There are two areas that we're going to do in today's presentation. One, we've put a lot of material up on our journal. The journal is our news magazine, if you will, and Catherine is our editor and publisher of the NCM Journal. We've been putting a lot of stuff up. So in case you haven't yet been to the journal recently, Catherine's going to show you what we have been looking at or what we've been posting. And then she's also going to give you an update on charitable activities that you might consider. I got an email from the University of Texas. I have an MBA from the University of Texas, and I don't tend to give money to the University of Texas as my graduate school. But I got a really, really direct appeal from the president, who said they're setting up an emergency fund for students. So UT students are going without jobs. They may have to relocate. There are all sorts of economic burdens that these students may be incurring that they don't have money for. And so it got me thinking, you know, maybe we can do something here at New Capital to draw your attention to some of the areas. I know the government's providing huge amounts of money, but I don't think that it's yet making it to all the places it needs to. So Catherine is right now going to take us through those two things, the journal and the charitable activities. Okay, Catherine, take it away.
Okay. So yeah, as Leonard mentioned, there's a lot of information coming at us. We want to share the most important information with you all. And so, yeah, lots coming at us. So we're putting a lot out, and just to kind of go over a few of those that have gone out this week. The first is personal loans. Leonard, you've got the slide. There we go. Thank you. Personal loans, avoiding financial complications. This is a piece we put together that includes resources and considerations for anyone who's thinking about making a personal loan to a family member or a friend during this time. Next is due date for federal income tax returns and payments postponed to July 15th. You probably have heard about this. There's some detail in this article on that change. Next, you've got federal student loan borrowers get some relief due to COVID-19. There's more information, again, on that change. Next is a note that the Fidelity Mobile deposit limit has increased. This is an effort to support the quarantine guidelines, so it's keeping less people out of the physical branches to make larger deposits. So they've temporarily increased that limit. Next is the NCM webinar recording from last week, the Special Markets Update 2020 #3. If you missed it, or if you would like to share it with someone who might find it valuable, that recording is up there. The next is bear markets come and go. This is just a look at trends from market history on bear markets. And finally is the market week. It's a look back at the previous week's market performance. So as I said, there's a lot of content coming in. We're putting out a lot more than normal because we want to make sure we're sharing that with you. So it's on the journal. It is also, you should be receiving it in an email format from the journal. So keep an eye out for that. If you're not receiving it, please feel free to email me and I'll make sure that you're on the list. So next, on ways to give. As Leonard mentioned, there's a lot of ways to give right now. If that's something you're interested in doing, considering giving to any of these organizations or funds that are trying to help in the COVID-19 coronavirus efforts. So in the medical area, you've got the CDC Foundation, National Foundation for the Centers for Disease Control and Prevention. Next, you've got the Gates Philanthropy Partners. This was shared by Fidelity Charitable. They have actually two funds that they have started in response to COVID-19. The first is the Combating COVID-19 Fund, which is working on vaccines and diagnostics. And second, we have the COVID-19 Therapeutics Accelerator Fund, which is expediting treatments to the marketplace. Next area is vulnerable populations. I actually received an email specifically from the Houston Food Bank. Of course, they're needing to get food donations to low-income or in-need populations. But in addition to that, they also have lost a large section of their volunteer groups because of the quarantine. So these organizations, so Houston Food Bank obviously is local. There's also Feeding America, World Central Kitchen, United Way Worldwide, which is also assisting in these efforts. So considering any of those would be an option for you. The next area is Emergency Fund for Alma Maters, as Leonard mentioned. I was looking into this today. There's a lot of universities have student emergency funds set up, and it addresses student needs in moments of emergency, as we're in now. So that includes housing and relocation costs, transportation costs to get students back to family members if necessary, getting technology, laptops and internet connections to students who don't have access to them in order for them to participate in online classes and more needs along those lines. So. And then finally, the National Foundation Center for Disease Philanthropy, Center for Disaster Philanthropy, CDP, has started a COVID-19 response fund. And one more detail on that, Leonard. Yeah, so they support organizations that are supporting healthcare workers, quarantined and vulnerable people, and hygiene promotions. So all of those are some among many ways to give to help people who are fighting the disease and fighting to help those who are affected by it. So that is all, and I'm going to turn it back to Leonard. Thank you.
Catherine, thank you. Thanks very much for putting that together, and hopefully that'll be helpful either with these specific organizations or other organizations that are important to you. I know a lot of people are trying to be helpful. I'm going to turn it over to JC now. JC, this CARES Act that is just out is so recent. I mean, it's like right now that nobody really knows exactly what all is in it. So JC has done a phenomenal job putting together a summary of what's in it that is sort of applicable at a high level, but also may have some specific resonance for the things we do for you as financial advisors. And so JC, take it away.
All right. Hi, everyone. Happy to be joining you all tonight. Catherine has helped me put this summary together just today in a matter of hours. So I'm just going to go over the big points here. If there's anything specifically people want to dive into a little deeper, I'm happy to answer that later in the questions or follow up with an email. Just let me know because we're still digging into this ourselves. I think the first one that is getting a lot of attention is the personal recovery rebates. And this is going to be some check or direct deposit that's going to be sent to individuals who need that direct assistance. And I think the thresholds right now are AGI up to $75,000 in your most recent tax return. Those people are going to be getting if you're single, up to $75,000. In your most recent AGI, you get $1,200, and then $2,400 for married filing jointly up to $150,000. So there's some specifics in there. They're giving $500 for each child you're claiming who's under age 17. And then it kind of phases out after those threshold limits. And let's see, the next one, big topic here is they're now allowing a $100,000 IRA distribution, and they're waiving the early penalty fees. They're not required to withhold any taxes on these, and it can be repaid in up to 3 years, or you can take the income over 3 years. So that's a big change to allow people to take those early those retirement distributions earlier and pay it back when you can. Another one, the employer-sponsored plans, they've also increased these loans to $100,000. I think most of the time they're about $50,000. So they've increased that, and they've delayed the repayment of those. Next, a really big one. So RMDs for 2020 are waived. If you're taking RMDs right now, they're waived for all of 2020. If you've already taken some and you feel the need that you want to return it, they're allowing that. And this applies for RMDs for IRA account owners and beneficiaries of inherited IRAs. So that's a big one. There's a new charitable tax deduction, a $300 above the line tax deduction. Must be cash, it can't be into your donor advised fund. And they've also upped the cash contribution tax deduction to 100% of your AGI. I think before it was about 60% could be deducted in cash. The next one, student loan relief, no interest. Payments can be suspended up until September 30th, so about 6 months, no interest on student loans, and you don't have to make those payments if you qualify. You need that relief. All right, there's a couple of health-related changes here. So qualified medical expenses from your HSA accounts now include over-the-counter products or medicines. So they're saying when a vaccine is available, Medicare recipients will receive that vaccine at no cost. Medicare D recipients can get a 90-day supply of medicine. There may be restrictions prior to that where you're not able to get that 90-day supply, but now they are allowing that. And there are relaxed rules for telehealth providers and their coverage, just so we keep that quarantine and we can get the help we need without going into those doctors' offices. Next on the unemployment compensation. So they've brought in who can get that help now to self-employed individuals as well as contractors are eligible for that benefit. They've waived they're now allowing you to take the first week of unemployment. Before, when you filed for unemployment, they wouldn't give you that first week there, but they're now doing that. And the big thing here, I think, is the compensation has gone up $600 per week for up to 4 months on that unemployment compensation. And then the state is also receiving incentives, or there are new incentives for states to implement these short-time compensation plans. Okay, and then for small business relief, this is for companies with less than 500 employees. They can now receive loans up to $10 million. And I think they're saying with interest rates, I think no higher than 4% is what they're saying, which is big for those small business loans. So another big thing is the loans can be forgiven. There are some caveats, but that's a huge part there. There's also a new employee retention payroll tax credit. So they want you to keep your employees employed if you can, and they'll give you a tax credit for that. Next is deferral payment of payroll taxes. So we're saying if you need to, for this period when payroll taxes are due, half of that can be paid at the end of 2021, and then the other half can be paid at the end of 2022. So that really pushes that back, the payroll taxes for those businesses. And then the last thing here is they loosen the net operating loss rules. I think they didn't let you carry it back anymore, but now they are allowing the net operating losses to go back up to 5 years, just so they can reduce those prior tax bills and receive those refunds and get the cash they need now for those businesses. And I think those are the big main points for that plan today. And again, we're still digging through it and getting all the nitty gritty of it. If anyone has any specific questions on those, please let us know.
JC, thanks very, very much. And everybody is working extremely hard at New Capital. I think you can see that for us to have taken this new law and gotten it down to 2 slides is pretty good. I hear the thing's 1,000 pages or something like that. So thanks very much, JC, for taking us through all that. Okay, I'm going to talk about the investment and market environment right now. I made this slide up. What this shows is what would your return be if it takes a certain amount of years for the S&P 500 to return to its peak. And its peak was in February at 33.86. And of course, this past week, it made a big leap to, I think, many people's surprise. But what the chart shows you is that if it only takes a year for us to get back, and right now, the close of day today, 2541 is the S&P 500, to get back to the 33.86, if it happened in 1 year, your return would be a 33% return. If it took 2 years, you'd have a 15% annual return. So these are annualized numbers. This isn't a total return. This is each year of the duration. So if it took 2 years for the S&P 500 to get back to its prior peak, you'd have a 15% annual return, right? And we're comparing these returns, stock returns, to returns in the bond world, and the 10-year Treasury now is under 1% again. So, under 1% for a 10-year Treasury bond. I understand municipal bonds are 3% and so on, but just to give you a point of comparison. If it took 3 years for the S&P 500 to get back to the peak, it would be a 10% annual return and so on. Let's just say you said, no, it's going to take a decade to get back to the prior peak. Well, now you're looking at 3% return. So this slide is just intended to help you think about the long term and what sort of return you could expect to get back to the prior peak. And of course, nothing says that the market couldn't exceed the prior peak, right? And over the last few years, we saw a number of higher closes and record closes. So we could see that, but just to get back. So I just wanted people to get an idea of what those numbers look like. We have right now, this is a look at the equity risk premium. And the equity risk premium is the amount of premium you expect to get above a risk-free instrument like the 10-year Treasury bond. What is the return that you expect to get for holding stocks above a 10-year Treasury bond? And I wanted everybody to see that this is the most extreme, at least up until a couple days ago, the most extreme that we have seen in an equity risk premium, even more than 2008, right here. You can see, even more than 2008. And this goes back to 1972. So we hit the extreme point of an equity risk premium. In other words, the market was judging that equities contained more risk to own them than at any time going back to 1972. And often that's a good time. That's proven to have been a good time, very good time to have owned and bought stocks. And so we've been doing that for you over the last few days. I'm going to show you some charts of some particular asset classes and some particular stocks as well, just so we can see. So this is a 5-year history of the S&P 500, and you can see, you know, we've had this long climb, and we had a drop down here in early 2018, and then at the end of 2018 is a pretty steep drop. People don't tend to remember that, and then whammo, right off the cliff here. And here you can see we've had the rebound. This is through today, still quite far down, but this is how much of a surprise this virus took the markets by. Absolute drop off of a cliff. This is developed international markets. The Europe, Japan, Australia, Canada, same thing, dropped right off of a cliff. You can see that, and we've had a bounce back there. Same story. Emerging markets, actually not as steep of a drop, but still pretty steep. So what we have here is a global pandemic resulting in a global market drop. Interestingly, this is China. China's actually held up okay, and its drop isn't nearly putting it back to 2017 levels. And a number of market commentators have held up China and said that the Chinese actions that they've taken in the health sphere have resulted actually in lower losses in the Chinese stock market. And you can see that it's a drop, but it's you know, we would expect it to be down to about here if the Chinese stock market was reacting the way that the rest of the global markets were reacting. And so China has actually provided a diversification benefit to diversified portfolios. Walt Disney Company, look at that. Whomp, right off a cliff with some bounce back. Look at that. So Disney's moved down to its 2007, even pre-2017 levels. Put its stock back 4 years. Zoom. We're all using Zoom now. Look at this. Company went public last year and sort of bounced around here, and then look at that. Suddenly the coronavirus hits and it takes off. Everybody's doing video conferencing. Clorox, boring old Clorox, look at that, just bouncing around, making bleach and soap and so on, right? And it actually moved up strongly. Look at that, had a big year from 2018 to 2019. I don't know why. I don't follow Clorox. And then it traded sideways, and then look at that, just had a nice big tick upward. Teladoc, company went public around 2016, didn't do much for a long time. Just kind of sat there and 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 made a move up, moved back down, and then look at that. Suddenly moved up. Anyway, I thought that would be interesting for people to see. The point here is that markets are doing their jobs. Markets are interpreting earnings data and business models and products and services, and some are taking a hit during this virus, others are doing well. And so this is one of the things that the diversified portfolio does. Yes, you're going to hold some of those that are doing poorly, but you're also going to participate in companies that are doing well right now. And none of us has the ability to predict which is going to do well and which is going to do poorly in the next days ahead. It's just completely impossible. So diversification is working, and it's working very, very well. Imagine if you're a Disney shareholder. Look at that. Imagine if you had 25% of your wealth in Disney. You know, you've been crushed. Okay, random thoughts. The amount of money that is being and the mechanisms that are being utilized right now by the federal government and by the Federal Reserve are all in support of equities, right? We have companies that without the support of the government would be facing bankruptcy, and not just the obvious ones, not just the airlines, but all the companies are connected. And I want everyone to understand that the money that is being released, both as direct supports to companies in the form of loans or payments, and to employees, some of the things that JC just read to you are a credit to employers to keep people employed. And that is the German model. The Germans are paying companies to keep people employed. I wish that was the model that the American government had adopted. But all of this is in support of the business infrastructure in the United States, and not just in the United States, but in Germany and in the UK, and frankly, all over the world, are in support of shareholders because they're in support of the companies. So this is an enormous, enormous safety net that is beneath the equity shareholder. And of course, these are bailouts. But yet this is the system that we have. You can argue about it. You can say, you know, we should let everything go bankrupt and the government should take over everything. I don't know that that would result in a better world. But you know, maybe. But that's not the way that the world is going. The world believes in companies, right? This is not 1917 where there's a Bolshevik revolution that's brewing, at least not that we see. Maybe about to drop on us the way the coronavirus has, but that doesn't appear to be the case. The company is the unit that the modern world uses to fulfill the economy. That's just the way it is. The modern world has come to that understanding that companies make products, hire people, and fulfill the economy. And so everything that is being done by the governments is in support of our equity holdings. That's a very, very important thing to understand in the big picture. Inflation, I think, is going to come with all the money that is going to be printed. In my judgment, it has to. When it appears, we don't know, but you can expect. I've been saying this, but it's probably going to happen next week that I begin to increase in all client accounts inflation-protected bonds, because I think that more than likely at some point we're going to see inflation, and that's going to be the price that gets paid for printing as much money as going to be printed. So far, things are peaceful. We don't have riots, we don't have looting, and that is a real tribute to the people of the world as people help each other. And I think that, maybe more than anything, is defining of this crisis. And of course, we all hope that it continues to be so. We're all fighting the same global enemy, right? This is unique. This isn't a banking crisis, but the specifics of facing the banking crisis in Europe may have been different than the specifics of the banking crisis here in the United States. What's unique here is that we are all facing the same global enemy, and so we're able to learn from what other countries are doing, and hopefully we're able to adopt measures that will be helpful to us. So this is a very interesting crisis from that standpoint. If you think back to the late 1990s, the Asian currency crisis, probably many of you don't even remember that, but there was an Asian currency crisis. Wasn't even felt in the United States, right? This crisis is being felt everywhere, obviously. Donald Trump's deal, very interesting. Trump's deal to the American people, this opening of the country by Easter, the deal appears to be, take the virus into your household and we will have a better economy, right? I mean, that's at the root, the offer that the President of the United States seems to be making. Risk bringing the virus into your body and into your home and into your family, and so that we can have a better economy. And it doesn't appear that the majority of people in this country are taking the president up on that deal, right? Trump, the art of the deal. It appears that most people in the country are, including governors, including Republican governors, are saying thanks, no thanks to that deal. And I think that's a good thing, that the country is putting our health first. Economists are now saying that it's a mistake to think that if we were just to suddenly sort of accept the virus washing over us, that would somehow not have any sort of harmful economic impact. That in fact it could be far more costly. And so, as I said last week in one of the prior webinars, the quarantine that we're experiencing right now is an investment. We're investing in the future by stopping the spread of the virus. And people are not taking up Donald Trump on the deal to show up in a crowded church a couple of weeks ago from Easter. Compromise in Congress. The Senate bill passed 96-0. There weren't 100 senators there because several were sick, with one with the virus, the others maybe. But it is notable that a 96-0 unanimous vote, who could have imagined a 96-0 vote coming out of the impeachment of the president in January and all the other strife and conflict that has been present in the United States Congress? We got a unanimous vote. And I think that is a highly positive thing. And I think one of the reasons why markets have taken a lot of heart, that it appears that Democrats and Republicans or independents or whoever you are willing to work together. And not just that, but are recognizing that they can't pass anything if they don't work with the other side. The Republicans came face to face with the fact that the Democrats must be consulted. And so when the Democrats put more teeth into the $500 billion fund that's going to be available to companies, the Democrats were prepared to scuttle the negotiations over that. They had power, and they have power, and the Republicans have power. And so in a way, we're in a good situation with Congress to be able to craft bipartisan bills, and that's going to be necessary because there are going to be more, there's going to be more money that has to be handed out. And so these are good signs. Cheap personal protective equipment insurance. The country's going to ask, why didn't we? Because we have a huge shortage that everybody is now becoming aware of, a shortage of masks and ventilators and testing, right? If we had had testing, we could have seen where is the virus, and we wouldn't have had to shut down the whole the whole country indiscriminately. And people are going to reflect and say, well, why didn't we have a federal effort to simply build stockpiles of these things? That would have been incredibly cheap insurance to ward off the risk of the economy completely melting down, not to mention, of course, thousands and thousands of people dying. And these are going to be questions when we get beyond the crisis itself. And we're not going to make that mistake again. Spending by Republicans. I am no fan of Donald J. Trump. Everybody knows that about me. But one of the things that he did was he loosened the Republican orthodoxy on spending in a crisis. If you remember, many of them didn't want to spend in 2008, 2009 during the banking crisis. But there is no such problem right now. And so if there is anything to give Trump credit for, in my view, it is that he broke the orthodoxy there. And it couldn't have come too soon because we needed Republicans to get on board with the spending. It's important that everybody understand that there's only one entity that can print money. It's the Federal Reserve. And the way the Federal Reserve prints money is that it buys treasury bonds or other bonds. Traditionally, it's been treasury bonds. But whenever the Fed buys a bond or buys any asset, that injects money into the system. That injects liquidity. And so the Federal Reserve is prepared to do whatever it takes. And Jerome Powell, the Fed chair, said yesterday on the Today Show, he said, there will be no problem. We will. And everybody can expect that that's going to be the case. Even the Germans are spending. The German government and the German people have been reluctant to do anything that would inject a hint of inflation into their economy. Why? Because in the 1920s, there was such rampant inflation, and then into the Great Depression, inflation. And most Germans believe that high inflation, that hyperinflation that occurred during the Weimar Republic in the 1920s led directly to the rise of Hitler. I've been listening to an audio book of a biography of Hitler, one of the most recent biographies. I think it's too simplistic of a view of history. You know, there's a lot more to it, to Hitler's rise, than just there was a bunch of inflation. That's just not right. But whatever the case, Germans have been absolutely, since the Second World War, completely and totally resistant to doing anything that would result in inflation. Until now. Now the German government is doing the same thing the American government is, which is to loosen the purse strings and to spend to try to get us out of this crisis. So what we're seeing here is happening all over the world. And I think this is the last of these random thoughts. We are seeing truly, truly phenomenal local leadership. The leadership, the best leadership that is occurring in this country is occurring at the local levels. Mayors and governors and city council people and county commissioners. These are the people who are really keeping their fingers on the pulse of what needs to happen for their localities. I guess some would be blamed for either going too slow or some going too fast. But our country really is in very, very good hands right now at the local leadership level. And they are in control. The federal government can do a lot of things, and the executive branch and the President of the United States can do a lot of things. But they can't order cities to open up if the mayors of those cities are not going to lift restrictions. And so I think we can take a lot of heart. All in all, these random thoughts, I hope, will give people very positive feeling that there are a lot of good things that are going on right now. Oh, last one of these. I want everybody to recollect that the thing that followed on from the virus of 1918, the influenza epidemic of 1918, 1919, were the Roaring '20s. It was a very strong economic time. Of course, it ended in the Great Depression. I don't think we're going to get the same sort of flavor of forgetfulness now. I think that we're going to come out of this period with a very resolute country determined to fix the things that are wrong with it. And toward that end, I wanted to highlight for everybody an article that I really liked. It's been forwarded to me by a couple of people, and it's in Politico. Coronavirus will permanently change the world, our world. And Catherine was nice enough to take the main points of this piece and to put them into a slide. And so in the area of community, and these are all scholars, professors of this or professors of that, and in other walks of life. And so these people were asked by Politico to give their prediction of what the coronavirus, what the effect will be in their particular area. The personal becomes dangerous. This particular writer said, who knows if we're going to go back to shaking hands? You know, who knows if our whole behavior is going to change in how we regard each other. A new kind of patriotism, where doctors and nurses are regarded in the same way as soldiers. A decline in polarization is the prediction that is being made here, that because we have this common enemy in the virus, that all the other differences are going to fall by the wayside, and that we're actually going to see a decline in polarization and potentially an ability to get things done more effectively. Return to faith in serious experts. You can afford to dismiss experts when there's not a virus around, but suddenly when there's a virus around, look at everybody looking to Anthony Fauci and doctors and well, I don't know, even financial advisors, I guess you could say, to return faith in serious experts. I hope that's the case, because people don't go to school and get degrees and get career experience and build experience for no reason. We should be listening to our experts. Less individualism. I think everybody's getting the idea right now as we sit at home and we go to the grocery store and food is there. And the internet brings us information. We're seeing that we are all interconnected, and this idea that we do it all ourselves, which is this rugged American belief. There's nothing like a virus to give the lie to that idea. We are all interconnected, and this virus is making that very, very clear. And hopefully that will stick with us. Religious worship will look different. I attended my Zen Buddhist service from Colorado last Sunday over the Zoom, and it worked. Not as good, but it worked. New forms of reform. I can't remember what the person here was saying, but basically the idea was that we can't even identify what forms it's going to take. Completely new forms of that. In technology, regulatory barriers to online tools will fall. and restrictions will fall so that people can avail themselves of it. A healthier digital lifestyle. What we're doing right now, I think, is a healthy thing, where I'm sharing with you and you're going to ask me questions, and so people are getting more comfortable with the ability to engage in a community through the internet. And it's not all just everyone tweeting right now nasty things. People are actually taking real time through this video conferencing phase that we're now experiencing to have real interactions. Yesterday was my parents' anniversary. Again, happy anniversary, Mom and Dad. And my sister set up a Zoom conference, a Zoom party, I guess, a Zoom cocktail party for all of the family. My sister lives in Los Angeles. My brother and his family are in Houston. My parents are in Houston. My family's in Houston, but I was here. And so there we were, all in our squares, wishing happy anniversary to my parents. And that's a healthier digital lifestyle, I think, as we discover how to engage in community during this quarantine. A boon to virtual reality. In health and science, the rise of telemedicine, of course. I put up the stock graph for Teladoc, an opening for stronger family care. I think that now that we all see that the federal government can pass laws that are in support of family care or family leave or unemployment, everyone's going to say, don't tell us you can't do it. Don't tell us we can't do it. We can do it. We just did it. We don't have to wait for a crisis to do these things. And it's going to make for a healthier country, a healthier population. And frankly, I think better stock returns and more stable stock returns and more stable bond returns. Government becomes big pharma. I don't know. We'll see about that. But again, everybody's going to say it took a crisis for us to be able to fix these things that have been problematic. Science reigns again. That sort of ties in with this faith in serious experts again. More things from this article. Government, Congress can finally go virtual. I don't know if anybody saw, but there was a big fight as to whether the House of Representatives was going to have to come back to vote on this new CARES Act. And I think one Republican congressperson forced them to do that. And until then, it was going to be a virtual vote. But we'll see. It would be great if they would do that, I think. We'd get more done. Big government makes a comeback. That is clearly going to be the case. Everybody who has disparaged government, remember Ronald Reagan said government is the problem. Yeah, well, government has been the problem since Ronald Reagan said government's the problem. And I think what people now see is that government has to be part of the solution. Not the solution, but part of the solution. And I think we're going to see that there's going to be a push for that. Government service regains its cachet. I think a lot of young people are going to say, we can't do this again. We've got to have a government that works, and we've got to have systems that work. And they're going to want to go into careers in government. A new civic federalism. Look at all this optimistic stuff is my point, that is coming out of, even as the virus rages and has not even peaked, when people are asked to reflect on what lies ahead of us, it's a lot of optimism. The rules we've lived by won't apply. And what this author was saying was, they said, well, don't tell us that we can't, if it's healthcare for all. Don't tell us we can't have healthcare for all. In other words, the rules that have existed are going to go out, because we're all sitting in our homes right now, and the airlines are grounded, and there's nobody at the airport, and we all get to go into the grocery store one by one. So it's like, sorry, dudes, the rules. Don't tell us we can't do this. We've done extraordinary things lately. Revive trust in institutions. Revive trust in institutions as people understand that to pull off solutions to deal with massive problems and massive challenges, it takes institutions. Expect a political uprising was this author's commentary. They said we're going to see a large diversion, continued diversion between haves and have-nots, and between high income and low income. And if this is not managed properly, expect a political uprising, and it may not be too pretty. So a note of caution there. Elections, electronic voting goes mainstream. Election day will become election month. and voting by mail will become the norm. These two authors basically saying that still to this day, the most reliable thing we could do would be to have voting by mail. In the same way that the census goes out, we would have elections go out in the same way. Global economy, more restraints on mass consumption, stronger domestic supply chains, widening of inequality gaps, hunger for diversion, right? Just as in 1918, we got the Roaring Twenties. People may hunger for diversion after we're let out of our houses. Less communal dining, but maybe more cooking. I'm sure everybody's doing more cooking. I've been doing some cooking. I like it. A revival of parks. I would love to see this, and we're seeing it. We've been seeing it happen at the municipal levels. Cities everywhere have been making more parks. But why can't we have more state parks? In fact, why can't we have more national parks? Why do all the national parks, by and large, have to be in the western part of the country? Why can't there be more national parks that are created in the eastern part of the country? You know, people have talked for a while about creating a Great Plains National Park, where you've had large amounts of people who have left the Great Plains from towns there. Why couldn't we reconstitute a national park in the Great Plains that would have buffalo herds and a return to that way of life available to be seen by the people of the country? And so a revival of parks. Now that we're all cooped up in our houses, and what is our relief besides listening to me, right? Going to the park. A change in our understanding of change. And as a practicing Buddhist, one of the things that we take as a given is that change is happening every second. There is no permanence. Everything is impermanent, right? But we always think things are going to be permanent. The stock market's going to go up steadily all the time. Our jobs are always going to be there and never threatened. We're never going to be trapped somewhere because of a virus. So just in how we understand change and how we accept change and come to make peace with the idea that change can come at any minute is something that's going to result from this virus. The tyranny of habit no more. I don't know. Very interesting article. If you're interested in it, we'll post it for you. That's it for my presentation today. I wanted to keep it short today, and looks like we're right at an hour. We'll be happy to take some questions now. Catherine, if you want to rejoin us, would be great. Can people ask questions just, without having to type it? Is there a way where we can let them audio their questions, or?
Yeah, if you're on a laptop that has a built-in mic, or you have a mic on your desktop, you
maybe raise your hand. I think there's a hand raise or something.
You can raise your hand and we can try it. If it fails, then type it in. But if anyone has a question, you can also make your choice. If you don't feel like speaking, you certainly don't have to, but otherwise you can type in as well. Also, while we're waiting for any questions to come in, I'm sharing the link for the evaluation. If you could please take a few minutes it's 3 questions, very quick. We appreciate your feedback. So if you would respond to that, I'm sending that out now. You should get the form. It's a link to a form, and if you would complete that, we'd appreciate it. We do have one question that came in. Okay, so here we go. Do you anticipate a mutual fund that combines many that will permanently change the world?
This is a great question, and thank you for the question. There are some funds. There's one I've looked at called the it's put out by iShares, the Exponential Technologies Fund. The problem is that change doesn't just happen with one company. As a result of this virus and the changes that take place, are fighting for survival. So every company is going to be making changes, and so I could argue that there's going to be a fund that's going to capitalize on particular changes, but I think that holding the market is still going to be the right thing to do, because whatever changes airlines make and whatever changes food companies make and whatever changes grocery stores make, and whatever changes the drug companies make, and whatever changes that entertainment companies make, they're all going to adapt to the new world. They always, companies always do. And so I think holding the market, we are all going to do just fine. And I'm excited. I'm excited to see how companies change their business models and return to profitability. This Q1 and Q2 of this year are going to be really ugly. Everyone's got to prepare themselves for that. That companies not only may not make money, they may lose money. I think Goldman Sachs and JP Morgan are predicting that we could see a net loss in the S&P 500. Okay, the market knows. It's already in the prices. The market knows about the virus. The market knows about the earnings. So the question is going to be, how do companies with their talent and with their leadership and with their, I'm sure they will. I have no doubt about it. But it's a great question. But I'll be on the lookout. I'll be looking to see, is there. Okay, next question. What about ESG funds? I am moving clients opportunistically to ESG funds, and specifically the DFA funds. As I mentioned in a previous call, and ESG, for those of you who don't know, means environmental, social, and governance. And these are funds that try to bring a more enlightened ownership approach to the companies that are in the portfolio. And they tend to do things like exclude tobacco or exclude cluster munitions or child labor or extreme polluters. And the DFA fund approach is to focus especially on, and so the ESG funds represent a dramatic decrease in the greenhouse gas emissions profile of the portfolio than the regular. Want it? Other clients I know would like it. Others don't have any interest at all. That's perfectly fine. But the concern is that I think that what will come next after this is addressed, the virus challenge is met, and we move beyond it. I think that having passed through this is going to make taking on climate change far more possible from a willpower standpoint. And I think that attempts to dealing with that are going to be absolutely overrun. Because the world is going to say virus pandemic. And there are arguments that human impact on the natural habitat of wild animals is what has caused this. Why? Because the belief now, I think the scientific belief is that this virus jumped from a bat population or a pangolin population. These are endangered animals with endangered habitat, and these animals are being pressed closer and closer into human proximity. And so there's a link between the oppression of wildlife and the destruction of wildlife habitat, possibly, and this virus. And so it is going to be very, very difficult to stand in the way of a chorus of humanity that's going to say, we must deal with our global macro problems. And at the top of that list is global warming. And so the ESG portfolio at least provides a potential hedge if that really gets going and causes some problems. It's not a complete hedge, but it is some hedge. Okay.
There's two more questions that came in. Also, at the request of an attendee, I put a link to the Politico article in the chat feature. So we'll share that as well when we do the recording of the webinar. But for you right now on the webinar, there's a link right here in the chat feature. If you don't get it for some reason or you can't see it, send me a note and I will email it to you tonight. So there's two other questions that have come in. The first one is, as you think about the upcoming inflationary economy, what is your focus other than inflationary bonds?
That's stocks and inflationary bonds. That's it. There's nothing else. That's it. High inflation is not good for stocks. Really, really super high inflation not good for stocks. Inflation-protected bonds are the only explicit insurance against inflation. You could say gold, but it's not an explicit and direct hedge. You could say commodities or real estate, but again, it's not. So the new capital portfolios are about to get pretty simple. It's going to be some regular bonds, and probably focused in the aggregate index type approach, and a healthy dollop of inflation fighting bonds and stocks. That's how I see portfolios. Pretty simple going forward here. But remember, inflation-protected bonds were only invented. They were invented actually by the Israelis in the 1960s. It was the first inflation-protected bonds, one of the great inventions by the Israeli government in the 1960s. But it took until the 1990s for the U.S. government to create Treasury inflation-protected bonds. We haven't had to use them since they were created 20 years ago in any sort of inflationary period. So my sense is that that's upcoming. I'm not saying this year, may not even next year, right? It could take a couple of years to work off excess capacity, both in unemployment and in other areas. But I would bet that inflation is on its way. Okay. Next question, please.
Yep. This is the last one for now, unless anyone has any more that come in. How is Warren Buffett speaking about all of this?
Buffett's been very quiet. He has not. Yeah, it's a great question. He has not had much to say. He had a very long interview I mentioned, but it's been a couple months. That's great. But it was before the virus, I think. And what he has said is that the low interest rates are a complete puzzle. Imagine that. Someone is brilliant and knowledgeable. I mean, nobody knows more about economics. Rather, no one knows more of the combination of finance, economics, and investments than Warren Buffett. And he says it is a puzzle. It is a mystery. We don't understand it. It is in other words, it is beyond. It is beyond theory. You know, it is related to whatever is ahead of us in the world. Now, some people would say what the low interest rates are begging their governments to take action to fix the world. That would be my interpretation of the very low interest rates. That the people of the world are begging their governments to get it together to fix the world's problems in climate, now in a virus, in inequality. The people of the world are saying, we will loan to you governments if you will get a good plan together to help the world and to work together. We will loan to you almost infinite amounts at the lowest of interest rates. That's my interpretation of the low interest rates, is that the problems now have gotten so big that only governments can lead the solutions to them. And so if that's the last question on the call, I hope this call will leave everybody with a sense of optimism. I've shown a lot of slides that have optimism in it, not just my optimism, but also optimism coming from a whole collection of experts on Politico. And this is my interpretation of low interest rates, that people want the governments to take action and are willing to finance them to do it.
There's another follow-up question to the previous, that is, are there market segments that are in your focus?
No. We have a global pandemic, and it's taken all markets down. That's why I showed those 3 slides on the U.S. and Europe and emerging markets. That you know, nobody is immune, and so it's all gotten taken down. And so it's a wonderful opportunity to diversify globally because different economies are going to come back differently from this, and different economies are going to deal separately and differently with it in different ways. Let's just take Europe, for example. Europe has gotten cheaper. I know Europe hasn't done well for a few years, and I know Europe's got problems economically, and I know Europe's got problems with the virus, but there are phenomenal, phenomenal companies in Europe. Some of the world's great companies are in Europe. That's where they are. They have a long history of building great brands and great companies with great people and really running organizations. So those are on sale. So I've been buying that, in emerging markets. I think people should have a great amount of respect now for emerging markets. Look at China. We have now surpassed China in coronavirus infections. At least those are the reported figures. All right. China's got more than 4 times the number of people that we have. So we can say what we want. And I know the president is saying what he wants really about China and it being the Chinese virus, and by the way, all indications are that the 1918 virus began here in the United States, and yet it's called the Spanish virus. Isn't that interesting? So we don't need to start all this talk about where the virus started. The virus started in an organism and went over to human organisms. But the Chinese really, and I know none of us really want to adopt their system of government, but they were facing a nightmare if 1.4 billion people contracted coronavirus. I mean, holy mackerel. That's really the trouble facing India right now. And if there's one country I'm worried about more than others, it's India right now. So we're buying the world right now. We're buying world markets. There's no one sector. It's a terrific opportunity right now for us to both hold the holdings that we have and to change over our exposures to be more global, although that's pretty hard to do with our portfolios. Sarah's telling us that Spain was the only country to talk about the virus in 1918, and so it got stuck with the name. I didn't know that. But I think it might have begun here. There was a big dust storm or something that took place, and it stirred up a bunch of cow manure, sort of like a dust bowl, and infected some soldiers. And so I think that's where the 1918 virus is traced to, here in the United States, but it's called the Spanish virus.
That's it.
Audio issues. Am I okay, Catherine?
It's breaking up a little bit here and there. I apologize for any audio issues. Seems like we're hanging in there, so we might jump out pretty quick before it gets. But there's no other questions.
Okay, and I'm sorry if I broke up. We're all at the mercy of the broadband now, and that's another great opportunity for us all to have fiber optic to our homes. And this is something that is an opportunity. What if the United States government, and we're going to get to this, we're going to get to stimulus. People have been referring to this law that passed today as a stimulus. It's not really a stimulus, it's a rescue, right? What's going to come next is stimulus. And, a really great thing would be to get fiber optic to everybody's house, including people who live in rural areas, right? This is a fabulous investment that we could be making as a country. So those investments are on the horizon. So that's it. I hope you have a fantastic weekend. I'm looking forward to it. Take care, everybody. And I hope that this call leaves you with a sense of optimism. That's what I've tried to do as I've put together the talk today, is to try to convey some of that. Catherine, thank you for all of the terrific information you gave on the charitable activities that people might think about, and also in the journal. And then JC, thank you for the great job that you did on highlighting some of the highlights of this new law that passed. If we can help you in any way, send us an email or whatever, and we will get back to you. And so have a great weekend and take care, everybody. Thank you.